Welcome to Jesus Before Money. My name's Corey. Well, um, I'm going to go over some things today that I think are very important and to give a broader picture about where we're at and what might be coming. And I know that I sound bearish. Um, it's because I am. Unfortunately, for the past 3 years, I was isolated in a truck and I got to listen to a whole bunch of world renowned economists and money managers and the like. Some super bullish and some super bearish. I like getting a whole idea of what was going on, okay? On both sides of the fence. Well, um, I was literally talking to my grandpa and telling him how the jobs data has been wrong for a long time. I mean, this has been going on for years. Um, and that's what you see right now are the revisions to the Bureau of Labor Statistics. So this BLS data is based on a statistical model that has this death rate that has been off for a long time. So for the past like 2 years plus, we've had these big job data growth. Like the BLS data would come out, and then the next month it's revised down, and to come out good, and it's revised down. Well, the market only goes off of the number. And then the revisions kind of matter, but not a lot. Um, and this has really pushed the market higher and higher and higher and higher and higher, right? Plus, we have all this AI spending that's pushing the market higher and higher and higher and higher and higher. Well, I just got off the phone, with my good friends, and this guy, he's not a slouch. He's in a decent position in life, and still, just the inflation and the interest rates are just killing people. And if you just read anything about the labor market outside of what they're telling you, you know that it's bad. I mean, people are literally scared to lose a job right now because there's not a lot of jobs left. And then AI is just going to deplete those jobs. So this is going to sound bearish, okay? And I'm going to try to give some optimism with crypto and what's coming with crypto. But I think it's going to be a little bit later. And I'm going to say this one last time. This is my opinion. I'm not a financial advisor. None of this is financial advice. But I personally believe that through the ashes, crypto will rise. And I'll explain that as we go. Okay? And, the big cryptos are going to be XRP, XLM. Bitcoin is still going to play a big role. Ethereum is going to play a big role. Solana is going to play a big role. Cardano is going to play a big role. Okay? Probably Algorand and probably Polygon are going to be like the top 7 that form a network, and we'll get in that. This is just speculation, but those are the ones that I've been buying. Okay, and I'm not the best trader in the world. I've been trying to learn how to do this. I'm more of a macro guy. The ins and outs I can get right, but I'm more of a buy and hold in crypto, and I'm just trying to trade the stock market. So some of the stuff I'm going to talk about is just macro picture, okay? Like day trading, it's too fast for me. But I'm going to give you a big macro picture of my technical analysis, which I think is very good. I have a very good mentor, and it's going to give you a very good idea about where we're at. So with that long background, okay, just look at this jobs data revision right here that happened, okay? This was one of the largest revisions that we've had next to COVID. I mean, here is the great financial crisis, 2008-9 here, worse than GFC, okay? But look at this concentration of downward revisions. I mean, look at how thick this is, and then boom, right? I think the job data is a lot weaker than they have been letting on, and being not to get political, but the BLS is full of liberals. I mean, Democratic supporters, and what better way to help keep your guy in, and then to drop a bomb on the next guy? Not saying that the data that they just put out was false. I think the data they just put out is real. And what they've been putting out in the past was not correct. And that just possibly the data is going to catch up to us. But this is a major red flag. Because once you start getting major revisions like this, then they come out and say we were in a recession. We're always in a recession before they call it, right? We've been in a recession for a year, and then they backdate the recession after all the revisions and everything come in. I mean, and if you just look at the sentiment of what's going on in the world, I mean, a lot of people already feel that we're in a recession. The rich, the people with cash are still making a lot of money on just money market accounts and on their high yield interest rates on their cash. But that's coming to an end, and that's usually when the Fed finally makes a big rate cut. And I know they already made 2 rate cuts for the election, but once they start really the rate cutting cycle, that's when things hit the fan. And that's what this chart is, okay? So you have a lot of people right now saying that, they're just begging for interest rate cuts, because as soon as they get an interest rate cut, the stock market's going to boom, things are going to get better, okay? Well, this is the federal funds effective rate. This is the overnight rate that the Federal Reserve controls. It's the money that, it's like 0 day, right? This is the money that they lend to the banks. Okay, these gray bars are recessions. Okay, going back to the 50s, and what you can see is when they go through an interest rate hiking cycle, on the way down is when the recession starts. On the way down, when the recession, down recession, we had it up and then down recession. See, now here you can actually draw a trend line here. You know what I mean? Where they had to anyway, I was looking at this trend line. It's kind of hard to see with the mouse, but once they broke above trend and they started hiking again, recession, put it up, recession, put it up, recession. This is the .com bubble. This is COVID, and actually we were heading into recession even before COVID happened, which is interesting. And then here, this top looks a lot like the Great Financial Crisis. Okay, so as we start coming down, the recession is going to be called. And then who knows what's coming down the line with a financial crisis or a bond market, meltdown in Japan, or, escalation of war in Europe that kills the euro or the dollar. I mean, who knows? Okay. But I have been warned that it's not going to be pretty. So this is going to sound bearish. Okay. Another thing that I have not talked about, that I could go into, but not today, is that your yield curve. I'm going to go over the yield curve right now. We're going to switch, and I'm going to start talking about that, okay? This is the 10-year yield, and I've talked about this a lot, where we've been in this 40-year consolidation phase, red line 0, and we've popped out of it, okay? So this tells me that interest rates are probably going to head higher, even though they're going to try to bring them in because of our debt situation. That's probably greater than 50% chance. Obviously, we can still come down. It's just you would have to have a lot of buyers for government debt. And I hope they can get that under control, because this would not be very good. From everything I'm seeing, it's literally we're going to be in a higher interest rate environment with like a weaker economy. Now, the Fed controls the overnight rate, right? And then you have like your 3 month, your year, your 5 year, your 10 year, your 30 year. Have all these different bonds and bills depending on the duration. They kind of change the name, but basically the government, when they want to print money, when they want to issue debt, they sell their debt at different intervals of time. And based upon that time interval, you get a certain interest rate based upon the risk. Right now, buying U.S. government debt at $37 trillion plus off debt liabilities of over 100, so we're really about like $150 trillion in debt. Okay, $150 trillion in debt. Let that sink in. Okay. And you got to try to fund this. Who's buying this debt when every other central bank in the world has their own problems, right? They're all in the same situation. China, the Bank of Japan, Europe, Russia, everybody is in a financial crisis. Just hasn't quite completely cracked. Okay. Now, what I want to get at though is the Fed can control the short end. This 10-year yield that we're looking at right now, this is what the 30-year mortgage, the 60-month, your 5-year car loan, your credit card interest rates, all these things are really directly tied to the 10-year. Okay. Your 15-year mortgage is more tied to the 5-year bond, but the 10-year is pretty much the most important. Okay. Outside of the Fed funds rate, which is always in the news, but what people don't understand is the Federal Reserve does not control interest rates unless they want to start buying their own debt. If we get into that situation, then we're just desperate. Okay, we're just desperate. Now, what do I want to point out on the 10-year? Okay, is first of all, this wedge pattern. I don't have a good read if we're going to break up or break down. Okay, but the one good thing to note is that on Friday, when we had that big sell up, August 1st, we had a lot of people run to bonds for safety, which is actually a good sign because now interest rates are cheaper, and hopefully this pattern, this down move, and then the sideways consolidation here, which you can really see, and we're going to see this bear flag on a lot of different charts here, okay? But this bear flag, this bearish consolidation is actually pointing to lower interest rates, which is a good thing, okay? Now, how low are we going to go? I have no idea, right? But now we're in a situation where lower interest rates are actually bad. You're like, wait, what do you mean they're bad? What does that mean? Okay. All right. You can see as the Fed starts lowering interest rates, right, we're in trouble, right? The recessions come in, lower interest rates. And you can look this up. It's just the Federal Reserve Bank of St. Louis Federal Funds Effective Rate. You can find this for yourself. But now we're entering into a stage in the cycle where lower interest rates mean that people are moving into bonds for safety. And why would they do that? Well, because the federal government can't default on their loans. They could just print, right? And we're the cleanest shirt in the dirty laundry. This is why crypto is going to replace the dollar, is going to replace all of these fiat currencies. The crypto people know that. It's just going to take time, but that's why I say through the ashes, crypto is going to rise. I think we're going into a global meltdown. Don't know the time or the hour, but I think it's soon. I think it's months. I don't think it's years. Okay, I think it's going to happen under Trump. Not to his fault with tariffs and everything else. It was kind of already baked in the cake. All right. Now, I know you're getting conflicting things. You're saying, okay, Corey, you think it's going up, it's going down. What's going on? Okay. In the short term, as we start to roll over here, I'm going to show you the SPX chart. But as we start to roll over here and then the interest rates start to come down, well, they're coming down in a bearish manner. They're coming down because people are thinking that the economy is going to roll over, so they're starting to buy. Okay? Hopefully that makes sense. Once the Fed starts cutting interest rates, they're cutting interest rates because things have broken, right? Even during the great financial crisis, when interest rates started going to zero bound, a lot of people couldn't even get a loan because the banks tighten up in those type of scenarios. So interest rates might go low, but you're going to have stellar credit. You're going to have cash. You're going to have to be ready to buy. Okay? So if you can do anything, if you need a house here and we really do crash hard, you're going to have stellar credit. You're going to have cash. You're going to be ready to go. Okay. Good news is that with this pattern and this chop, the interest rates are most likely going to continue down and test the bottom of here. I thought they were going to come up, but they never did quite break out of here. Okay. Which would have been a bad sign for the economy. But now this is a bad sign for the economy. And I know that makes probably no sense to you. Like, what are you talking about, Corey? Okay. Let's see here. Okay, let me see if I can talk about the bear steepener and the bull steepener. Okay. A bull steepener is when the long end of the curve starts to go up because of growth and inflation expectations. Okay. People are literally not buying bonds and they're going into the stock market or they're going into risk assets because we're in a growth phase. Okay. That's when the short end of the curve, and it's probably backward, but the long end of the curve starts to rise and the short end of the curve kind of stays put or comes down. That's a bull steepener. Okay. A bear steepener is when this stays the same and then the long end of the curve starts to come in. That means people are running to safety in the bond market, and then the Fed catches up. The 10-year yield, the bond market is what they call the smart money. The smart money moves first, and then the Fed just follows their lead. The Fed really looks at the 2-year yield and the 3-month. But they're following that. How far away are they from the 2-year and 3-year yield? 2-month and 3-year yield. Those 3-month and 2-year is what they really look at. Okay, and what we have been in is a situation where we have an inverted yield curve. An inverted yield curve where the 3-month yield is actually higher than the 10-year. Okay, and what does that mean? That means that that people with cash have been getting a lot of interest off of holding cash. Okay, because the Fed pumped up the short end of the curve, while the long end of the curve has remained pretty weak. Okay, well, this is also a major recession warning. Okay, this inverted yield curve. Now, as they start to lower the short end, okay, and right now what we have is we actually have a steepening of this inverted relationship because interest rates on the longer end are starting to come in, so they're going to catch up. But it's probably complicated. But anyway, just hang in there, okay? So all these people making money on money market, cash, has actually been a stimulus for the economy. As the Fed is going to be forced to lower interest rates because of a bad economy, okay, this side will continue to come in probably unless we lose it. If we lose it, if there's not a lot of people, that buy our debt, then this can explode to the upside. And either way, this is bad because it's just starting to come in. It's starting to say that the long end starting to say that we're starting to weaken. But this is really bad if we explode to the higher just because we're in a crash-like scenario. And inflation's roaring and, nobody wants to touch U.S. debt and we just take off. Because then we're in a stagflation, high interest rates environment with the low economy. But anyway, a lot of people are making money on cash. As the Fed starts to lower interest rates, now all the savings for cash is going to come down, those interest rates, right? Well, now what do you do with the money? If the economy starts to cave in and the stock markets, what do you do with your money, right? And that's something I'm going to try to give you an idea of what to do here. And you're probably just rattled by now. And probably like, who is this guy? Does he know what he's talking about? But all I'm saying is this big drop here, right, on Friday when we had that stock market sell, and then followed up by this inside bar bearish consolidation means we're coming in. It means that people are running for safety, right? Which is telling me that when we look at the SPX, the S&P 500, and I've been tracking this, okay? In the last video I said we're falling, and then what do we have? We had, a couple days up. But this is what we've done. We tagged the levels I thought we were going to tag, and my upper threshold, right? I keep warning that we're getting close because I see the warnings. And then boom, okay? Now, this consolidation here, you think, oh, we're getting back to all-time highs, right? Everything's good. Well, really, what we've been doing is just chopping in this upsloping parallel, okay? Now, gaps are meant to be filled. They literally, on Tuesday, they popped us up into this gap and sold us off. Let it ride up. Today, popped us up above almost until all-time highs, and then just sold us off all day, right? And now the institutions are playing these games where they're selling. They are using retail investors as exit liquidity because the financial institutions, BlackRock, JP Morgan, they see the writing on the wall. They know way in advance when things are getting dicey. Okay? Now, what to expect on the SPX? A mature bear flag is 7 days. 1, 2, 3, 4, 5th day. So tomorrow is Friday the 8th. Okay? And then so Monday, by Friday and Monday, if we are not above this high, and this is like a massive knife wound. If we are not above this high by Tuesday, Wednesday, I'll give a couple extra days. We are coming down. And we are probably going to come down very, very, very hard. Okay? All the signs are there. Trump, I heard someone talking like Trump is like America's this little canoe, and we have Niagara Falls, and Trump is just like fighting to keep from going over the edge right now. And people will say, whoa, the tariffs and all this stuff, man, it doesn't sound like it, but he's literally imposing these tariffs so we can help pay off our debt. But he's also imposing these tariffs as the global economy has been already hurt. Okay? The global economy has been weak for a long time. Years. After the COVID money disappeared, the global economy has been weak. Okay? Now this resistance line that formed support, and we broke on Monday and then recaptured, that was Friday. We broke. But anyway, once we start getting below here, this trend line is so important. Once we get below here, we will find support in this gap, and we'll ultimately find support in this gap. Okay? These are going to become really important key areas. After that, it's this bottom, and then it's ultimately what I think is from this pivot during COVID, it's going to be this 4,500, 47.5 area. I'm not saying we're going to get down there. All I'm saying is that this pattern, if we just consider probabilities, okay, a big down, 2 days big down, and then followed up by this slight to up weight, 45 degree-ish up weight, consolidation pattern, that is a bear flag. It is bearish consolidation even though we are going higher. Probability-wise, greater than 60%, we will be coming down. All right? Can we go up? Yes, but what I'm going to show you is there's just nowhere to run in this market, okay? Plus, something that was brought my attention today, look at this area right here. We up, you what to do? We gap down, 1, 2, 3, 4, 5. Look at this area here, and let's compare that to what we just did here. A big gap down, up and sideways, a big gap down, up and sideways. So what it's telling me is maybe we get another gap down, maybe we come back up, ultimately make a new all-time high before we begin the rollover. Patterns tend to repeat themselves, and this is going to be very interesting. And this was brought to my attention by Verified Investing. Okay, that's where I get a lot of my analysis. That's where I learn from. So a lot of my stuff looks similar to theirs because it's the same. I just added my own cup of tea, right? But it's not just them. I'm not just reverberating them. A lot of this is mine as well, okay? And we share a lot of charts. All right, so I think we're coming in, and so interest rates are going to start coming in. Even the Fed is going to probably lower interest rates, and people right now, they have this assumption that lower interest rates are good for the economy. What I've showed you multiple times is once the Fed starts lowering interest rates, that's really when um, it hits the fan. Okay, so just know that. And yeah, it's I think we're really close to the end, like the end before Jesus comes back. Uh, I would try to get on board with him as soon as possible. I think things are going to get a little dicey. Maybe we crash hard and then we come back and we have this glory period. But I don't know. Um, Time will tell. All I'm saying is the probabilities over the next month, okay, are highly leaning towards a rollover, a much larger rollover than we had. Okay, at least down to 60-25 is where I think we're probably going to end up. 60-25. Okay. Now let's talk about why I think that, not just by looking at this chart. Right? Let's go to Microsoft. Look at this Microsoft chart. Look where we gapped up to, okay, before this big pullback. And this big pullback was this day. This is Microsoft and Meta's earnings. And we're going to go over both charts. Gapped up, pulled back, right? Gapped up, pulled back. Well, where's Microsoft going? Obviously, Microsoft can turn the corner and start attacking back up here. That's my Ethereum. We're going to go over Ethereum here. But let me turn my alerts off. Pause all. Yeah, I need a break. But anyway, attacked up here, right? Meta attacking up here. Okay? I mean, the Magnificent Seven are tapped. NVIDIA. Okay, NVIDIA, I had this one. NVIDIA is now up in here trying. Well, guess what? Jensen Huang is selling almost 250,000 shares, right? 250,000 shares. And I put on puts, I put on 180 puts on NVIDIA. They're not in the money right now. But once this trend line breaks, I think all eyes on NVIDIA. And I'll talk about Palantir, but eyes on NVIDIA and Palantir. Once those are over, I think we're really rolling over. But what I think on NVIDIA is that we're coming down here to test this 153 level. Okay, not going to be huge, but once this breaks here, we're going to come into here. That's ultimately and we'll jag around, but we're ultimately going to find support here, and then we'll see if it holds once we get there. Okay, TSM. Now Taiwan Semiconductors. I have been waiting for Taiwan Semiconductors to get up here. Okay, but why am I pointing out Taiwan Semiconductors? Because literally this company makes, like, I can't remember. I think it's almost like 90% of all advanced AI chips come from Taiwan, and most of those come from Taiwan Semiconductors. I don't have those facts completely right, but it's a majority of all the chips for AI are made in Taiwan, which is why I think China is going to take it much sooner than people realize. But what happened today? We had broken this trend line, started consolidating here. Some news came out about, they are going to be restricted from tariffs. It popped right to the scene of the crime and fell down. So now what we can do is we can chop sideways, put in a bear flag, or we can re-attack. But now this line is a lot of resistance. Maybe we get up to 260, but it's going to be very interesting to see what Taiwan Semiconductor does here in the days ahead. Not financial advice. I'm not a financial advisor, but if it got up to about 260, I would probably put like 280 puts on to give myself a little room. But, once China takes Taiwan, this stock is probably going to zero. So unfortunately, and I talked before about Intel. Intel is going to have to pick up their game. All right, let's talk about Palantir. Palantir just had this vertical move. Okay, and why I think you have to watch NVIDIA and you have to watch Palantir, because once both of these break, I think that's the sign. Okay, now we had this resistance line and then it popped on earnings. So now what I'm watching is up here, and that kind of corresponds to the $200 range if it can get there. But one thing I wanted to point out is that it's been chopping up and down in this area. So maybe we attack back to about $1.86, $1.87 tomorrow, and then we'll just see how this goes. But ultimately, this is going to break down, and it will retest this gap about 160. Question is when. But it's when Palantir starts rolling over. It's when Nvidia starts rolling over. Is really when this sells. I mean, this is a $4 trillion company. I don't think a lot of people realize how crazy that is. Okay, I think the .com was like 500 billion was a lot. I don't even think they had $1 trillion companies. So, man, when this rolls over, it's gonna be bad. Okay. All right. Let's go into gold. Now, gold had a topping tail here. It was actually a weekly topping tail, a lot like Bitcoin, right? And it's been holding. And a lot of people are thinking that this is going to bust out and go to 4,100. Well, if we have the type of rollover that I think we could have, let me see if I can find it in the chart. I should have had this already, but if we go to the .com, which was 2008, 2009, right? So this is March 2008, and this is July 2008, and here is October 2008, and you can see that we were trying. We had a dip, we had a pop, but look at this sell-off here into the end of the year, and to the beginning of the year, like October, November timeframe when the markets started selling over. Let me make sure that that's correct. So that's 08, October 08 ish. We had a pretty strong correction there. So let's go back to the SPX. Let's find 08 right here. So we kind of peaked around October 07 and rolled over all the way until March of 09. October 07 to March of 09. Okay. Anyway, as the market started rolling over, gold initially rallied, and then to March of 09. Anyway, gold caught a bid, but it's not exact. I'll work on this so I can explain it a little bit. But you can see that during the financial crisis, let me make this a little bit bigger. During the financial crisis, gold went down. Okay, gold went down about 34% from its high. From its high that it made in 08 and the high and the low that it made in November of 08. From March to November had a crash. Why did that have that crash? Because the stock market during March to November of 08 where are we? Sorry, guys. Right about here. Because that's when the stock market really started to nosedive. Right here. Ding. That's when the stock market sold off. 54%. Okay? Now, why would gold sell? Well, gold sells because literally we have a liquidation event where everybody gets hit in the mouth and they have to sell anything of value that they have. Okay? It's one of my very first video. I was looking at a target on gold about $27.5. $2,705, right? And we'll see if we get there. But and that corresponded to some pivots. I think it was this top right here, this breakout top, somewhere in here. But I'll go back through that video later. But anyway, another warning sign we have on the economy, okay, is that gold has been going up. Why would gold be going up if everything was good, right? Gold doesn't just go up when you're risk on. Typically, people move into gold when they're scared of the economy and they're trying to go into a safe haven asset. But like I just showed you, when the market sell, there is no safe haven asset. Everything gets hit. That's why people move to cash, because at least cash can stay there. But we're at a point now where cash, the dollar might not be around. Even though I would say go to cash, have a cash position, because if we pull back, if you can, right, you're going to be able to buy things. You're going to be able to buy crypto. You're going to be able to buy stocks. You're going to buy gold. You're going to be able to buy almost everything at a much cheaper price. Okay, but there's a lot of people getting sucked right in right now to crypto and everything else, and they're going to be stuck holding bag for a while, in my opinion. Maybe I'm wrong. I just don't think so. But anyway, with gold, we've been hammering on this trend line, hammering, broke, and now we're tagging it today. Okay. Now, the thing I'm very curious on is if we're going to get rejected. The only reason I say that, because this was a topping tail not only on the daily, this was a topping tail on the weekly. Okay? On the weekly, you can see it much more evident. This is a big topping tail, and we haven't been able to get back above, and now we're hammering on this line. Okay? Not saying gold can't go higher here. I'm just curious is if we start selling off here, is gold going to follow? Okay, we'll see. Let me bring up silver. And then we're going to go over, before I go to silver, let's talk about oil, okay? We have this great economy, right? There's no problems here, nothing to see here, right? If the economy is doing so great, why, and I'm talking about the global economy, why is oil at under $64 a barrel? Stock market's at all-time high, right? We're supposed to have all this growth. We're supposed to be in this booming economy. Why is oil falling on its face? You ever think about that? This is another sign that tells me that the market's about to roll over, right? Ultimately, I think, the chart is pointing to, a breakout of this wedge, okay? And that, that'll be bad. And maybe we'll go into a period of time, like my first video, I talked about higher interest rates, higher oil, weaker economy, I don't know, or a war. I really think war is about to break out here. I mean, we have had wars and rumors of wars like you can't imagine. Trump's been able to squash them for now, but I don't think they're going to last forever, right? I think we're heading into war. Ultimately, I think we're heading into war. I think war is going to crash the economies and the dollars, the fiat currencies around the world. I mean, we're talking about a major war, and then we'll be waiting for Yeshua to arrive, right? I mean, we're talking about birthing pains here. I'm going to try to find it in Mark. I think it's Mark 13. Give me a second. I mean, the Bible is clearly giving us the playbook here on what's coming, right? And a lot of people a lot of Christians believe that we're going to be raptured out before tribulation. Yeah. I obviously, why would God subject Christians to his wrath, right? He's going to try to take his church out of here. But just imagine the day before the worst 7-year period on earth. What is that going to be like? You think it's just going to be like a walk in the park? No. I think the persecutions of Christians, maybe not here in America right away, but I think it's just going to escalate. I think we're going to start to see a lot of people dying around the world. A lot of Christians just being slaughtered, okay? Because we know what happens in the end times. And anyway, I think that's going to happen. I think we're going to see massive collapse, I think, in the economies around the world, right? I think things are going to get really, 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 really bad before we're just taken out of here. Before it gets even worse. But I just feel like we need to prepare for the worst and pray for the best. Okay, this is exactly what the Bible. This is Mark 13, 7, and you'll hear of wars and threats of wars, or rumors of wars. But don't panic. Okay, don't panic. We're not panicking. Yes, these things must take place, but the end won't follow immediately. Nation will go to war against nation and kingdom against kingdom. There will be earthquakes in many parts of the world. How many earthquakes have we seen lately? Okay. As well as famines. We've seen the earthquakes. We haven't seen the famines yet. I think famines are coming. I have the grow tower. I'm going to expand my grow towers. I'll talk about that in another video. But I think hydroponic farming is going to be very important. And famines. But this is only the first of the birth pains. with more to come. So wars, we're going to be in massive wars, and this is mostly around Israel. So we couldn't have been here, right? The Bible is Israel centric. We couldn't have been here without Israel being a nation. Okay, so now we're there. We are in the 7th week of Daniel. We are in the final, the last days, the last moments, the last seconds of time before the rapture, before this world ends, before this world just falls apart. And everything I'm seeing in these charts are telling me that we might be there a lot quicker than a lot of people realize. Okay, but these are only the first of the birthing pains. So wars, remember war. We're going to go have a major war before we're raptured out of here. We're going to have a lot of earthquakes. We're going to have famines. Okay. When these things begin to happen, watch out. You will be handed over to councils. This is where I kind of start saying is, listen, guys, I don't think we're just raptured out of here right away, because it starts to talk about the persecution of Christians, right? And then it starts talking about the sacrilegious objects standing, I can't even think. But then it starts to talk about when the third temple is rebuilt and then the Antichrist takes over. But anyway, I'm just trying to warn that we need to buckle up. We need to get ready. You need to get ready. You need to dive in your Bibles, and you need to get ready. I mean, why is oil down? Okay, why is gold up? Can you buy gold right now? Honestly, yeah. I think gold is going to go to $10,000, right? I'm just kind of concerned here that if we do sell, that it's going to roll over and you're probably going to be able to get a much better price. Okay? You do what you want. That's what I'm waiting for. Silver. I'll talk about silver. Sorry. Silver has been chopping up in here. Okay? That's why we pulled back. I think this level right here, around $35, maybe even just a little bit lower, $34.50, is going to be major, major, major support on silver. We'll probably bounce here and then get another push up above 40, right? But it's going to pull. It looks like it's pulling back in the near term. Let me go to the weekly chart of silver. I know a lot of people can't really afford gold, but look at this cup and handle on silver, followed by another cup and handle. Silver is going to hit $50. Silver is going to hit $50. Is it going to happen before the crash or not? I don't know, right? Are we even going to crash? I don't know. It's just the signs are pointing to me. The probabilities are very high, right? This is a massive cup and handle. So we're going to come up here. Silver will hit $50. Mark my no, it's going to hit $50. Might even be by the mid of next year is what I'm kind of thinking, right? I think we're going to have a pullback in silver, pullback in stocks, pullback in gold, pullback in everything, and then the gold, silver takes off. It's going to take off because they're going to start printing money again. And then they're going to make money cheap. And the first thing people are going to buy when money is cheap, they're not going to buy stocks. You can buy gold and silver because it's the safest play. Okay? And it's going to be on discount. But this is a $45 move from the bottom to the top. Once silver hits $50, it's going to pull back. Then we're going to 100. We will see $100 silver. If you could buy silver down by $35, that's a really good deal. We're going to see 50, and then we will see $100 silver. This is a cup and handle with a cup and handle. This is a very bullish sign, okay? Not only that, let me throw in a logarithmic chart, okay? I like those logarithmic charts, and let me look at this. I'm going to put it to a monthly, actually. And let me look at this parallel channel I have right here. Is it that one? Yeah. Look at this parallel, this nice parallel on silver. Right after the 50, we'll head up to $100. Well, ultimately, I think we might see the top of this thing around $300, right? And this could probably come in just a hair, but this is a cup and handle. A cup followed by a handle with another cup, probably going to hit 50, make another handle before we explode up to 100. That's what's going to happen with silver. Okay. Honestly, I know a lot of people are very excited about crypto, and I know crypto is going to do fascinating things. But once we get a big pullback, I am going to look to be buying probably silver, XRP, XOM, maybe some Ethereum, and Bitcoin, and gold, and probably in those orders, right? Okay. Let's just end here with Ethereum. Let me get my Ethereum chart. Oh, we got to talk about Bitcoin. I haven't even talked about that, huh? Sorry. Okay, like I've mentioned many times, I kind of put thicker lines. This boom, this tag, and we tagged it. We are in a major resistance on Bitcoin. Can Bitcoin break through and go to $1 million? Absolutely. What I personally believe, like crypto will rise through the ashes, is we're going to have a major financial disaster around the world, and then countries are going to be forced to move into the digital age. And then once the countries start adopting this thing, it's going to take off. So I do believe that if we get a pullback here, this is probably going to be the last pullback, right? The last time to get in. All right. So this is a monthly chart. I can see us attacking here again, but I don't think we're going much higher. Not yet. I could be wrong, right? I'm not a financial advisor, but ultimately where I think we're going back to is right here. Ding, ding, ding. I think we're going to see the $80,000 bound again. Okay. Could we go all the way to this lower trend line? Sure. But I'm going to just stick to 80 for now. And why I say that is because this topping tail here on Bitcoin has really been controlling bearish consolidation. This is bearish consolidation we broke. Now today, where did we catch support? We caught support on this trend line here, right? This trend line, ding, 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 right? But this is kind of bearish consolidation, even though we did put in a little bull flag and a pop. So if we can't get Andy here, right? If we can't get above this trend line, above this $18,000 mark, if we start to come in, like maybe we get a big sell in the stock market tomorrow or by Monday, right? Then Bitcoin, once it breaks here, it's going to find support down here around like 105,000. And not to toot my horn or anything like that, because I don't really care about this stuff like being right. But I said that Bitcoin was going to bounce about 112,000, right? I gave that level right on the top of here. I gave that level 112,000 on my last video I made, and literally it bounced on a T. I mean, it went to 11,998. Just pierced the $12,000 region, but that's where it bounced. And I said I'm not going to play the $12,000 area, okay? But I think Bitcoin's coming in, guys. You can hate me all you want, but we could attack this again. Maybe see 125. Just feel like it needs to go to 125, but the stock market is kind of really pointing that that's not going to happen. That this bearish consolidation, we only have a couple more days left before we roll over, right? 1, 2, 3, 4, 5, 6, 7. I mean, this is bearish consolidation here. I think we're going to roll over, okay? Now, Ethereum. ETH has been on fire. Where's ETH? All right. ETH has been on fire, okay? Now, look where it's pulling back from, right? Now, this was bullish consolidation in here, and it's breaking out, which is great for ETH. I hope people are making money. I just hope people are willing to possibly take profits. I just think the $4,000 level is going to be very key. And then what I'm really tracking is this top here. Top. So, 4,075, maybe 4,200. Who knows where we're going to get up in here. Actually, I could probably give you a better than who knows. 47. See, I don't think we're doing this because right now this is a retail buying frenzy. We've had a couple of companies decide to make ETH treasury accounts, but this was COVID money, right? People are struggling right now with inflation, right? I don't think that's happening, guys. I think the top is getting close. Probably these pivots right here, this top right here. If we were just to draw a trend line, hold on, from here, and put that through and mark the top, that's 41.36, so 41.50. Probably a good solid number to be like, hey, might want to get out of Ethereum in the short term. Not financial advice, but its days are drawing numbered. Why? Because I think the stock market's days are really drawing numbered. And that's it. Okay, let's briefly look at XRP, and we'll go over XLM, and then we'll call it a day. Okay. No, this has been a long video. No, XRP, just like XLM. I was thinking this was bearish consolidation, but what we ended up doing in the meantime was we made a trend line, and this is a bullish pennant. So now we've broken out. Okay. XRP most likely is going to reattack this $3, in 70 cents, $3 and probably 75 cents is what it's going to attack. Can we break through that? Absolutely. Are we going to break through it? I don't know. But this is going to be heavy resistance. This is heavy resistance until it no longer is, and this is heavy support until it no longer is. But for now, we are probably going to attack up here to about $3.75, $3.65, $3.70, somewhere in this area. Will we break through? That is the question. Okay. I hope we do. I know a lot of people are really hoping that XLM takes off. I'm just skeptical right now. In the long run, I think, when the banks step in and this becomes the new system, this is going to be the wealth transfer, right? But in the short term, I think we're probably stalling. Maybe I am wrong. XLM. I had some levels on XLM. I was really looking for this 35-cent mark. Excuse me. For now, we haven't got there, but we started the same thing, putting this bullish pennant. Now we're breaking out. So for me, as I've mentioned in the past, if we can get up here to the 60-cent area, 57, 60 cents, maybe we bust through. But this area is heavy support until it's not. And what this is on the weekly is this wedge pattern. And these wedge patterns are very, very bullish. When this thing finally breaks out of here, you just take this and you add it. I think it was like $1.50. I mean, that's going to be a home run. And when it's at, it's under 50 cents, you're talking about a 3x from here, possibly even a 4x. And that's just getting started, right? But we will see a lot of resistance up here. And like I said, if we get up there, I probably, depending on what's going on, I'm hesitant to, but I'm probably going to take it off the table and then buy back in, because that's going to be like a, almost a 4x for me. And, I think that I can almost double up, sell there and then buy the dip. Okay. Now let's end there. That was a long video. The only thing I'm going to leave you with, I'm going to revisit two things. Okay. I want to revisit this. In the back of your mind, just realize that interest rates, the bond market is complicated, and that lower interest rates probably not going to be a good thing in the short term. Once the interest rate starts going down, that's when really things hit the fan. Okay. And the fact that these job number revisions were very significant. I don't think this was necessarily they're playing games with Trump right now. I think a lot of games have been played, or a lot of incompetence. But I think the truth is really coming out, that the economy is a lot weaker than everyone thinks. And that also leads me to my thesis of why I believe that right here, when that data came out, the institutions saw it, they started dumping. Plus, we were into major technical resistance. The charts already tell you something's coming. They just don't know what it is. Okay? And since then, we've been chopping in this bearish consolidation. And for now, I could say with probably a high probability, probably about 60% probability that we'll be filling the 60-25 gap. Probably within a month or two. Okay? I mean, we can hang out here for a long time. I mean, looky here. Looky here. We, where was it? We gapped down, we chopped up, we gapped down, we chopped up, we broke. But we had been here for a long time, right? Going up and down, up and down, up and down. This really looks very similar. Is this drop consolidation, which was only 5 days, so tomorrow's going to be interesting. This drop, and then we got more consolidation, made a new all-time high, got everybody off sides, and then ripped it the other way. Okay. So could we see that? Another drop, maybe another new all-time high, and then the big rip down? Absolutely. I would almost think that that's their best case, their base case. That's probably what they're going to try to do. All right, let's end there. God bless you. I hope you maybe learned something, and with that, until next time, I hope and pray that your blessings, your dreams come true. Any healings you're wishing for, any financial blessings, just whatever you need from God. That we know He's a provider. We know He's going to provide, but sometimes He provides in His time. So go through the testing, go through the process, and with that, I hope to see you all on the other side.